I just walked in right at the beginning, and I got to tell my little Lululemon story. I'm a chartered accountant, CA, CPA now, as we're called, but grew up in the tech community here locally with Deloitte, was a manager on PMC Sierra and Pivotal Software, and really love working with early stage companies. Had to experience and go down to the Valley, was involved right at the tail end of the internet boom on a couple of pretty high profile IPOs, and that was pretty exciting. When I moved back to Canada, I have a real passion for working with companies in the early stage of development and try to migrate them to fast growth paths as fast as possible. But when I came back, I still had to pay the bills, so I had some expertise in Sarbanes-Oxley. So one of my early clients was Lululemon. So it was before they'd gone public, and I had a pretty good relationship with some of the executive there, and basically gave them the proposal to pay for some of my compensation in either equity or gift certificates. So of course my wife and mother-in-law, etc., and my sister. So guess what I went for? Yeah, what? Anyway, we had some fantastic Christmases. Anyway, that's my little Lulu. As I just came in, I picked up on that story. So anyway, I've worked with a lot of actually graduates from this program, which include Matza Innovation, Meta Optima. I also worked early on with Boot Up Labs, which was an early incubator in town here, and had a couple of good wins in that model there. And then, and what we are is I'm just a member of Tandem. We're an association of independent CFOs, controllers, and bookkeepers. And let's get on to the fun stuff. So what I'm going to do is focus first off on giving you some tips on really building a successful business here, irrespective of the competition and a little bit irrespective of the financial modeling piece. But the lessons, kind of the top 10 lessons from my perspective, to make sure that you do them to optimize your chances for success. Then I'll get into the good old-fashioned accounting, generally accepted accounting principles. I'll try to keep it lively. And if you do have any questions, feel free to throw them out there so that we can keep it interesting. I do believe strongly that the financial model is critical to understanding the business model. And I know you spent the morning talking in quite a bit of detail on that. I'll keep it quite pragmatic. I'm a big proponent of keeping it simple, but at the end of the day, it needs to translate into key financial metrics. That's your generally accepted accounting principles, and we'll go through the basics of that. And then I've got some examples, so hopefully we can get to that. Just kind of give you a flavor of what you should be looking for. I'm also a judge for many years, and I obviously have a passion for seeing good numbers. And the companies that I think that I've seen that have been successful really, really know their numbers well. As well as the side of that is the CEOs that really know their numbers are the ones that repeatedly have the big successes. Okay, so actually there was a year we participated directly. We had a software play called QC Doc System many, many years ago. And we went through, we learned a lot. The whole program's fantastic. We weren't successful, but boy, did we learn a lot. So I would approach the whole competition with that attitude. You know, this is a bit of a beauty competition. Are you in the right space right now? I would focus on learning as much as you can from this and focus on building the foundations of your business. Whether you're successful in this program, it's about the same statistics of hitting a home run with the VCs. So I'm just throwing up the obvious with some comments there. The other one that's a little one for me is the services element, the last one. Often, especially when you run into these kind of competitions and venture capitalists, they're very focused on technology. I've seen a lot of successes where the companies build their businesses around a service offering first. I was a CFO for Quick Mobile. It's like the fastest growing software company back in 2013, 14. But we started that business with a service offering. We had phone calls from Accenture and Microsoft about 2 or 3 months before the iPad was launched. And it was like, can you build us an app for this big high-profile event? Okay, we had some expertise in that space. That was a completely custom developed application, but boy, we landed that service engagement, built some great software that we maintained the intellectual property on, and we built a very successful business around that. And we didn't let go of that service offering. We continued to build the business with revenues, fully service-based, but we built our intellectual property on the base of that service model. So I'm a big believer in that. Okay, so here's what you gotta do, okay? I've been through a few nasty success stories, or breakups effectively, so I'm a big proponent of a very simple incorporation structure with a reverse vesting. I think Mike Volker, who will speak later, a little of this I've gleaned from his expertise over the years, as well as with stock options as well. But the idea there is if you ultimately have a falling out, you don't want to get into a protracted legal undertaking to go your way. So there's simple structures, as well as working with lawyers that really understand this. Like I'll throw out the Faskins and the Harper Grays, Steve Lucas, who I presented for years. These guys really, really know tech startups. They're Faskin's biggest law firm in the country. Don't cheap out. They will get your stuff done, and I'll tell you, if you compare the medium-sized firms to those big firms that have done it before, you save a lot of money at the end of the day, okay? Raise your first 25 grand from friends and family. If you can't get somebody or yourself to self-fund, how are you going to possibly expect somebody else to invest, okay? Just the pet peeve of every accountant. Make sure you divorce yourself from your personal business. Get expenses, okay? Get an expense reporting process going so you can get your GST money back, okay? I think over the years, I would have probably $1 million, no kidding you, in late registered GST, because you can only backdate 30 days. As soon as you incorporate, register for GST, you may not make money, you're a startup tech company for years. That GST is very advantageous for you, okay? Build real shred, okay? We have an amazing program in Canada, the Scientific Research and Experimental Development Program. Push the boundaries of what you're trying to do. The main objective of that SHRED program is to build technology that again, I'll just speak to kind of software development, but it can't be just something that's a matter of time of building. Try to push the boundaries, and that's where you'll get some real intellectual property at the same time. Build something truly novel and meet the qualifications. Pay your development team, your engineers, and get your 45+% back on their salaries. It's a fantastic money-making, well, not a money-making exercise, but a money recovery exercise, okay? Oops. Okay, we have another program, an incentive program called the Eligible Business Corporations in British Columbia. You need to register for this right away, okay? This allows another BC resident angel investor to invest into your company, either personally or through a corporation, and they will get a 30% recovery back on their investment in your company if your company qualifies under that program. Most tech companies do. It's a first come, first serve, but most angel investors are aware of that program and will look to make sure that you have that. Because if it's basically 30% back on their investment right off the bat, okay? So there's some other rules to that, but make sure you do that. Leverage the NRC IRAP program, okay? That's a fantastic program. Riz and the ITAs, they're great. You want to meet them early on. They'll help you vet your business, and they'll steer you down. What you want to do is try to get into their Y program or their youth employment programs. So Almost every one of my clients has almost gotten those grants. They're like $10,000 to $30,000, and they'll pay for helping employ young developers, young prospective employees in your companies. But what it does is it seeds a relationship with them, okay? Then once they have a relationship and they understand your project, and hopefully you've had some success in that, you can get to bigger money programs, okay? The angel circuit. So yeah, as you're going to these events, fantastic to meet the angels around town and find prospective investors. Also look for customers, right out of the gate. Invariably, investors are tied to customers, and I've rarely met an investor who may not be in a position to invest in your company, but boy, are they good at offering you advice as to who you might want to talk to in their network who could be either an investor or a customer, okay? And then, yeah, build partnerships and networks early on, okay? Okay, now on to the fun stuff, okay? So what do you need in your core financial plan? You need historical from inception up to date. They don't necessarily need to be audited. Just do management prepared financial statements. Wait until you're investors or that you can truly afford a review or an audit. Okay, it's just not a necessary evil. I was an auditor for 12 years. Until you truly need that, okay? At the same time, I'd be like, get a sophisticated CFO if you can, or get a good relationship with an accounting firm that can make sure that the quality of your financial reporting is at a very high standard, so that if you do get to the point where you need to have an audit, that it's easy to be conducted, okay? That's kind of, again, our area of expertise. So what you want to do is unaudited, prepared by management, financial statements as closely as possible in a compliance with generally accepted accounting principles. In Canada, it's like IFRS, International Financial Reporting Standards. I built my career on US GAAP. I was a semiconductor software guy, so that was my area of expertise. We're actually catching up in a lot of ways with the US because they were so inundated with some quite complex accounting rules. So those best practices are being adopted quite quickly. The other thing, I get to it later, for your companies, find a public company in your space as quickly as possible. Someone that you can just look at their financial statements, go to CEDAR in Canada, SEDAR.com, or EDGAR, which is SEC.gov. There is a wealth of financial information, prospectuses, MD&As describing businesses that one day you will want to be acquired by or that you will compete with, okay? As you elevate your expertise in your business model, you need to speak to investors on what space am I in, who are my competitors, what are my key metrics. There's a wealth of information out there. You can go look at it, find your peer companies, and literally produce your own financial information with the objective of having them look at you going, boy, your numbers look like our numbers. It would be so nice to just simply acquire you and have a bump in our numbers. So you can kind of get ahead of the game, and all that information will give you a wealth of knowledge about the industry space that you're getting into, okay? At the end of the day, what you're producing is statements of operation, the profit and loss statement, that what did we do over the course of this year, revenues minus cost of sales, gross margins, minus all the operating expenses, what did we make at the end of the day, our net loss, net income, okay? The statement of financial position, as it's called now, it used to be the balance sheet, okay, is what's our financial position at a point in time, okay? You gotta know how much cash you have, what your receivables are, what your shred receivable is in Canada is a big one, and then your liabilities, what do you owe, and how much equity at the end of the day balances out your financial position at any point in time, okay? And last of all is the statement of cash flows, which is basically a reconciliation of your cash over the course of the year, okay? So I'll throw out that what I just described is principally and obviously historical financial information, okay? It's far, far more important, and it doesn't even really need, my best clients over the years have been engineers that really like their numbers, that know, I can almost tell immediately a CEO who's gonna be successful because they really, really have an inkling for the financials and not GAAP, but what are the key metrics to my success as a business? You don't have to be an accountant to do that. A lot of it is basic logic, okay? So those are what I would consider to be like non-GAAP, like what are the key performance indicators that I'm gonna need to be successful in the business I'm starting, okay? You really gotta know what those are, okay? What's your burn rate? Okay, you're gonna ask, the investors will ask that all the time, okay? It's your net cash outflow, which is often confused with your spend rate. So obviously one's a net number and one's your gross spend. And at the end of the day, it all carries to that runway, which as a startup entrepreneur, you're always like, okay, when do I run out of cash? Okay, you always have to have a good perspective on that and make sure you're ahead of the game as to what you're gonna do about it, okay? And then EBITDA, earnings before interest, tax, depreciation, and amortization. This is, again, a means of trying to simplify your financial reporting to something that everyone can understand, okay? So EBITDA is more towards what's your operating performance for the year, your earnings without non-cash items, interest, carrying costs, etc. Those are key metrics in most public companies and numbers that you'll have to, again, have a handle on when you get to a point where you can compare yourself to industry players, okay? Post-money value, pre-money value. I actually have a couple of templates that I've brought, and I'm got to kind of remove a few things. I'm going to show them later, but they are basically a model for your pre and post money. They also are critical. It's got like your central securities register. So as you raise money, you have to be meticulous around tracking the subscription agreements, the money that you raise. And this will, again, make things really easy with your lawyers, as well as managing your stock options. Okay, how do you do that? What are the implications to my valuation if I'm giving my employees stock options? Again, I'm a big proponent of stock options so that you can get some equity. I learned my lesson from Lululemon. I'm all in for equity from now on. And then there's just a basic means of calculating that. Okay, these are things that you'll be asked anytime. You should generally have a handle on what the concepts are, okay? So this was kind of my lead in here. At the end of the day, it's like an engineer is kind of the perfect, just get your blank Excel spreadsheet and really manage your financial statements. If you can't build your business in Excel, how do you think you're gonna build your business when you actually have to hire all your employees and do it? It's just your open canvas to go, you know, I think this, right? It starts with estimates. It's your way of translating what's in your head into something that someone else can interpret and figure out how you're gonna grow your business. Okay, so I'm obviously being the accountant, I'm a big proponent of taking that time to do that. Okay? Focus on revenues. Okay, revenues are who's your end customer. Canada, we do get a little caught up in all the incentive programs. Most of my clients make millions in dollars in government recoveries long before they make any significant revenues. But at the end of the day, what you're doing is trying to get some value add and going through the exercise of selling somebody for value, and you're making income on that exercise, okay? And they are instrumental in telling the story. But at the end of the day, the story is far more important than the numbers. It just shows a person a canvas to how does your story translate into traditional financial information, okay? And get out there and test those numbers early on. Get people's feedback. Every investor will have a little bit different perspective, and you have to have it at a very simple level to be able to articulate what your value proposition is, okay? I'm a bit of a B2B specialist, so it's more like you know, your traditional sales cycle as opposed to consumer. I have clients in the consumer space. a few big successes that never made any revenue whatsoever. Like Context Media was one of the VCs. Boot Up Labs was, we invested in a company called Context Media that did business at Sumify. They were acquired by Twitter long before Twitter went public, and they were a tremendous success. But I'm more of the traditional, how do you grow your business, okay? And that's, understanding your competitive space, when do sales happen, understanding the nuances of the CRM, the customer relationship management system is far more important even than your financial, other than paying your bills, in articulating how you're going to generate revenues. What is a lead? What is an opportunity? How do I manage that exercise? Ultimately, your CFO drives the financial numbers out of the CRM because the CFO is going to drive the predictive information in that company. Your story is all about translating that exercise of marketing your product, selling your product, getting interested customers, running demos, sending proposals, getting contracts, delivering what you're selling, okay? You got to know the nuances of all of that. And it is all just a financial modeling exercise of its own right, okay? And there are key metrics like a customer acquisition cost. As you're formulating this in Excel, you're contemplating how long is it going to take? What are the nuances? Who am I selling to? And you are invariably calculating a customer acquisition cost. Then you do it. Prove your numbers or correct your numbers. And that's what good investors are looking for, that you're going through that process. Okay, yeah, I spoke to this, leads, opportunities, proposals, contracts. You need to know the mechanics of that. Make sure that you have that you're ahead of the game as to how you're going to close deals. Understanding what backlog is. Once you've got a contract, now suddenly that was a quick mobile problem. It was easy to sell. At the advent of mobile technologies, it was like every conference should now no longer have a big bag full of swag and your brochures. Just put it on your mobile device. We were inundated with interest, okay? It was more about delivery. Went for 12 employees up to 185 employees as fast as we could possibly go. Okay, but that's in its own exercise a challenge, and you need to be able to manage that effectively, obviously, okay? And then as you're going, it's all about, satisfaction and, churn rate. Like, yeah, selling something's fine, or especially online SaaS model. Okay, someone signed up for it, but are they sticking around? Are they paying for it? You need to invest in those relationships and make sure that they become long-term, like the lifetime value of those customers truly is or speaks to the value proposition that is in your business plans, okay? So these are some foundational things that you just need to work through in your modeling exercises, okay? This is more the Sumify models, or you guys may, certainly it was hot for a while, and it still really is. There's just major opportunities for companies who can get landmass grabs in terms of, I would describe as eyeballs, that you just truly, Twitter still, like lots of companies that are not making any money, but boy, they're recreating a business model in their own right. So there's some validity, obviously, in that, and owning that advertising space. So there's just different metrics and different ways to think about that, depending on the business model that you are focused on, okay? So opportunity analysis is an interesting one in my mind. Again, it's not GAAP. It's not generally accepted. It's more about like, what's your space? I think you probably spent a lot of time talking about this earlier, target market and how big is it? And I'll use an example of one of my clients, like early on, Meta Optima, which is in the space of taking a device and imaging your moles and being able to accelerate the process of having that vetted by a dermatologist. So interestingly, like just in the course of finding out how many dermatologists there are In the US, there's 23,000 people per dermatologist, okay? And the average person has between 15 and 50 moles, okay? You have to go in Canada, it's about the same in the US, but you have to go to your GP in Canada first, and they'll put you on a 6-month waiting list to get your suspicious-looking mole checked, okay? Over the course of your life, your moles and skin change dramatically. That is the most ridiculous logistics problem ever. Okay, just do the math, like times 50 times 23,000. It is a ridiculous exercise. That really helped gather the foundations for the early business plan. And then it was like, did you know that melanoma is like the most horrific cancer that you can get? But that if you catch it early, it's nearly completely curable. Okay, it's a $250 exercise. Okay, but you add that story, and then if you do get melanoma, it's a $150,000 endeavor for the insurance company to go through all the treatments for that patient. So you combine those two financial stories together, and you have an amazing value proposition. Okay, and you have the formulation of an opportunity that is probably worth investors pursuing significantly. And so we've seen from that seeds of a story a tremendous amount of success in a relatively short period of time. Okay? But that's the exercise here. Again, none of that was GAAP. That was just kind of common sense, going online and finding some key metrics and putting the story together. Okay? Valuation is commonly a story. And I've been asked as a CI, can you value my company? I'm like, no. Go talk to investors. At the end of the day, especially early on, it's how much will they invest into your company. And one investor will have a completely different perspective on your valuation than the other. What the key to valuation early on is putting this whole story together, supporting it with financial information, operating your business and seeing success that shows that your financial expectations are coming to fruition or are, developing in a manner that shows that you have a scalable and valuable business. At the end of the day, valuation is as simple as the net present value of all your future cash flows. Okay? So this is as simple as going, should I go buy that, government bond, which has absolutely no risk of return, and dividing it by the interest rate. Okay, so if you can make $1 million per year, divided by that low, that's the value of that bond. Your business is no different, except for the risk profile is significantly different. And the financial model we just talked about is the key to driving what the cash flows will be in the first place. So valuation at the end of the day is really putting those two pieces together. Okay. I talked about this already. So the simple value metrics, that was what I just kind of told that. That's Matza. Okay, so this is another business we work with, or I work with, CFO for a company called Matza Innovation. I think the first time I saw the investment pitch for that was like probably about 35 slides, and I'll be honest, when I finished watching it, I was a little unsure of what that business model. At the end of the day, though, we got it down to a relatively simple story. What Matza does, it's in the phytochemical extraction process. And so in plants, the apples, skins of blueberries and cranberries are compounds, antioxidants, while you drink red wine, okay? And so we could go into a cranberry juicing factory where they produce pomace, okay? They take all the sweet stuff out, put it into juice, and sell it. In the skins of those cranberries are proanthocyanins. They're actually really beneficial for preventing urinary tract infection. In blueberry juice, the blueberry skins is loaded in antioxidants, okay, anthocyanins, okay? We could buy a ton of this pomace for about $800-900 US, okay? Then we run it through this proprietary extraction process, and we can get 42 kilograms, so 1,000 kilograms down to 42 kilograms of highly concentrated anthocyanin, which is basically take a pound, 5 pounds of blueberries in a little shot of glass or a nutraceutical supplement. Cranberry was that product anywhere from $150 to $250 per kilogram US. Okay, that's $800, $10,000 of value with a technology that just uses water and power. Pretty valuable, simple financial metric that at the end of the day gets through that 26 pages of, man, the technology is really confusing, but what's the value proposition that someone can really understand it at the end of the day? If you can get that nailed, you will help those investors really understand the value proposition of your business, okay? So it is often about just simplifying those stories down, okay? At this stage, okay, yeah, concluding. So I'm, huge proponent of this program. I'm an advocate for startups. I love hearing stories. I'm a big cheerleader as far as I'm concerned. I rarely hear somebody who tells me their story and I'm like pessimistic, but I will be like, oh, if you could do this or that. So feel free to share your stories, and the whole network here is really good for that too. So that's why the New Ventures BC program is fantastic in my mind. Okay, like I said, the financial model, it really becomes a framework for how you, at the end of the day, will operate your business and tell your story. And don't underestimate the value of that model. Interestingly, I was at a company that was looking to acquire a client. And boy, was that CEO, it was more, he was not an accountant, comes in the meeting with a calculator, simple calculator. And it was all about the numbers, right? Just running. I was really, really impressed with just how focused this extremely successful CEO was on understanding his numbers and the value proposition that we were presenting to them, okay? And the other one, boy, you learn a lot from failures. I can tell you, I've seen lots and lots of companies. I've learned a lot of lessons, as Mike can attest to. He's been in the business for a long time, as have I. Sometimes you just have to do it, okay? OODA loop. Does everyone know what the term OODA loop is? Okay? It was developed by a U.S. Fighter jet pilot, okay? It was how you win a dogfight in the military. Observe, orient, decide, and act, okay? I see startup technology companies very much in that same framework. Sometimes you just got to get yourself to a point where you got to make a decision, okay? And whoever in the concept of the OODA loop is the fighter pilot that can get inside the loop of their opponent will always win, because they basically have a very reasoned and rational approach to making decisions, correcting for mistakes, and proceeding in a more effective pattern, okay? The pivot. The pivot, I'm not a huge proponent of the pivot. Obviously, if you need to pivot, companies that should be always pivoting, they should be doing that weekly. They should be making little iterations on the things they learned from the week prior, okay? Same with computer gaming. It's the same OODA loop concept, okay? And that's pretty much it. Oh, next Saturday at the Profile, some of my colleagues are running a boot camp as well, where we get into a little bit more setting up your accounting systems, making sure your GST is all set up properly, how to make it really easy for your accountant, how to get ready for audits, how to take advantage of some of the programs that are out there, that kind of thing. And
Go back.
sorry. Angie's going to send this one around, so yeah.
I think we linked to this already on our site as well.
Okay.
I noticed it on your site. Okay, any questions? We got a couple minutes. Hands up. Oh, we're question free.
Question free. That's good.
That's rare. Okay. All right. Well, thank you, Sean.